This video I want to discuss the question of remortgage and remortgaging your property. Essentially what we're seeing a lot of now is people remortgaging in order to perhaps avail of a better deal or a better interest rate with a different lender. So what's involved? Somebody comes to us and they are remortgaging. That means that they're going to pay off their existing mortgage with their existing lender. And in order to do that, they're going to need a new loan offer from an alternative lender. So there's a couple of things that we as solicitors need to do. One would be to take up the title documents for the property which the existing lender will have. We will need to do that in order to register a charge for the new lender and to send those title documents to the new lender when the charge is registered. The new charge is registered with the land registry. Before we do that, however, we must take up the title documents as a matter of course from the existing lender, and then we must receive a loan pack, a loan offer from the new lender. Then we need to find out from the existing lender what are the mortgage redemption figures. Mortgage redemption figures then is the amount of money that the existing lender will need to get in order to redeem or pay off the mortgage. So once we know that, then we need to check that we're getting enough money, that our client has arranged to obtain enough new finance to pay off the existing mortgage, and in order to have enough money to pay us, pay our fee, pay land registry fees, and pay a couple of other miscellaneous fees. So once we draw down the funds then from the new lender, we redeem the mortgage, that is, we pay off the existing mortgage with the old lender. We ask the old lender then to give us a discharge, a note or an e-discharge, confirming that they have removed their charge from the folio, the property folio, and then we register the new charge, the new mortgage, on the folio with land registry. So that's where land registry fees will arise. That is essentially it in terms of remortgaging. Remortgaging was a big thing a few years ago when people were remortgaging their property in a rising property market, rising values that is, and they were remortgaging in order to buy second-hand property, and the banks obviously were very generous and very liberal with the funds, and they were lashing out money basically to allow people to buy properties, second properties, buy-to-lets, properties for pensions and so on and so forth. That's changed now, and it's a more restrictive lending environment, and the central bank obviously have guidelines etc. in relation to lending, and the banks have quite frankly been badly stung over the last number of years, especially since the Celtic Tiger crash. So your typical remortgage now is going to be basically somebody looking for or getting a better deal from a new lender, different lender, and perhaps getting a different, better interest rate, or maybe some incentive is being provided by the new lender. For example, switching costs or switching fees, a contribution towards those from the new lender or whatever. Hope you find this video useful. If you do, I'd appreciate if you gave it the thumbs up down below, and you may be interested in subscribing to my YouTube channel. If you are, just hit the subscribe button below. If you're listening to this on my podcast, the Irish Law and Small Business podcast, then I'd appreciate if you left a follow or a review on iTunes or on Spotify or whatever. Thanks a lot.